Good morning, all. I hope you are doing well, and welcome to another one of my videos. So, I have just one pair on watch today, and that is pound yen. And I'm going to break that down for you now. I do have some other pairs which I'm looking at, and I have some alerts set on, but they look like they need a day or two to develop. So, I'm just going to let them develop, do their thing, and if the alerts trigger, I will have a quick look at them just to see what the land looks like with those pairs. But without further ado, let's break down this pair for you now. So, pound yen. Why am I looking at this pair? I'm looking at this pair because we came down to this area. We have this liquidity point here. We come back down. We have this 1, 2, 3 touch structure which taps into that liquidity point, taps out a lot of the orders, and then we start to see the natural ebb and flow of the market, the impulses and corrections. And it seems quite clear to me, if we just zoom out to the monthly chart, it seems quite clear to me that we're headed all the way up to this standout liquidity point, this sharp move up. There was a sharp move up here, followed by a sharp move down, giving me a clue that there were a lot of orders in this area, particularly when this overall correction is this wide relative to this move down. So we have a sharp move up, sharp move down. We have a correction which is very wide relative to this move down, where at least 80%, 80+% of the way to this liquidity point. So it seems logical to me to assume that we are headed up to that area where there will likely be an exchange of liquidity. And if we come back down to take out this near miss to this area, that's another story altogether. But that's the target area, hence why I've got that arrow on. So as I drill down to the weekly chart, you can see I've just been pattern separating. When we moved up, we had this. We move out of this. We have this tight correction, slightly larger correction. We have this correction here into a tighter one, into a larger one. So the sequence is quite good. I'm always looking at the sequence. Then we have this correction here. If I draw down to the daily chart, you will see this a bit more clearly. You can see we have this 1, 2, 3 touch structure. It breaks out of that, taps out a lot of liquidity, and then pushes up. And then we have that tighter correction on the break of this. And we move out of that. And then we consolidate above this area. Yes, we are slightly below it at the moment, but we consolidate above that area, giving me a clue that there was not enough liquidity up here to send price to the downside. So you can see the structures more clearly. Once again, I've been pattern separating. If I just drill down to the 1 hour chart, once again, I'm looking at the sequence. We have a kind of negligible liquidity point there, or exchange, an area where liquidity was exchanged, and we tap into that. As I said, we push up, and then you've got these tight consolidations, impulse, correction, impulse, slightly larger tight correction into a larger correction. So the sequence is good there. This larger correction into a tighter correction, into a slightly larger one, into a tighter one, into a slightly larger one, and then we have this larger one. And then if I'm just going to flip this upside down, and although this doesn't look the best, what we have here, we often see this when we have a move down such as this. So when we move out of these corrections, then we have a very large correction, which is very large proportionate to the move down. This is often what we call an M-style pattern. So we see this, we get this kind of M-style structure like that. Price breaks out of it, and it often taps into an area of liquidity before we see the further continuation to the downside, or in this case, the upside, bearing in mind that I've flipped the charts. Okay, so that doesn't surprise me at all. When a correction becomes this wide relative to a move down, we often break out of it. So what am I seeing here? So we kind of pushed up to here, and we have with the back end of this structure, which this move here, this move up missed. It also missed here. If you just look, well, it tapped into that one, but it missed that one there. So that gives me a clue. When I saw this, and I saw this start to move down when I was doing my forecast last night, that gave me a clue that there were still orders at this ray line here, because we didn't quite tag it, and we also didn't quite retest the back end of that. You've got to remember that a lot of people believe that what was previously support becomes resistance, and vice versa. Once these structures are broken and they get long or short and they have their orders set just above here. There's stop loss orders, and there's often limit orders just above there as well. Okay, so what I'm forecasting for that reason is the following. If, let's flip this back the other way, if we push down to here, you can see we've correctively moved down. Okay, we moved up from here, but we moved up very correctively. That gave me a clue that that was not the big players causing this move, because we don't normally see these low momentum candles if it's the big players, the banks, etc., getting involved. So when I see a corrective move up, that gives me a clue that this is a bit of a FOMO move. This is likely retail doing this, and it will likely come crashing back down again. And of course, it does come down, and I like the fact that it's coming down with low momentum, because that often indicates that we may be running out of steam in this area. And if we narrowly miss this area, as I said, there's likely limit orders and stop losses just below there. So if we tap into that area and we push back up, and we get a flag such as this, then I will be looking to get long either on the break of the flag. So the correction, just to touch on it for those that are new to this way of trading, the correction afterwards is the confirmation that we who trade the Falcon strategy look for to determine whether price is going to move in one direction or another. And so, trying to call the bottom here would be with some kind of rejection would be more risky, because it's moved down correctively. We don't necessarily know exactly where the orders are, so you could be tagged in and tagged out multiple times before price actually shows its hand. Okay, so you could take multiple losses doing that, because there's no real structure to this part of the move. Okay, we've broken out of that structure, and there's no real structure to this. So the simplest thing to do is to let price tag those limit orders, tag those stop losses, and then push up. If there's a lot of orders down there, bearing in mind that this is the price action is the mid price of the bid and the ask price. If there's a lot of orders stacked down there, then price will typically react aggressively as these orders are taken off the table, and the remaining orders, or a disproportionately high number of the remaining orders, are above market price. That will move the price up aggressively, and then the correction afterwards is typically the big institutions stacking their orders before price continues in the direction that it's traveling, the impulse correction continuation. And then I would easily be able to manage a trade for something in the region, of course we don't know the size of the flag, but something in the region of 4% up to this high, just in case this is because it's important to stay neutral, in case this is some kind of bear flag or bull flag, because I've got the chart upside down, to push lower, because we have come from an impulse. So because we've come from an impulse, this could be a correction. So if I was if we tap below there, we got a flag like that. This could be some kind of bear flag, to excuse the drawing, to push lower. So you do have to be mindful of that, and it could also be some kind of ending structure like that to give us a 1, 2, 3 before we push up in that direction as well. But if that was to happen, I would almost certainly be able to manage this up to this area before price push back down, if that was what was occurring. So that's what I'm going to be looking for today, folks. It's not this part of the move is not the most clear cut of the kind of entries that I would ordinarily look for, but there's context to this. It makes sense. It's well positioned. The sequence is good, other than this little bit here. And the entry would be good if it shapes up. I'm going to put an alert back on the charts, because I think this move here actually triggered my alert. So I'm just going to set another alert. There we go. If that alert does not trigger, then I will not be looking at this pair again today until I do my forecast for next week. I'll start selecting my pairs for next week later today, and that's how simple we need to keep it as traders. Thanks for watching, folks. I hope you've taken some value from this, and I will be back on Monday with another one of these videos, providing I have a pair or pairs on watch. Speak to you again soon.